Hello, 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 everyone. How is everyone doing? I guess it was Tank It Tuesday. Actually, this push this morning created the double top pattern in the S&P, which triggered very nicely. First target hit, halfway bouncing after the halfway second target. How is everyone doing? By the way, you know what to do if you're new here and you find this content beneficial. Please subscribe, hit the like button, and ring the bell. So we got that out of the way. Let's see. Hey, Ken, how are you doing? Long time no see. Are you on tour right now, Ken? Are you touring? Everyone, Ken is a guitarist in a touring band. So, yes, you are welcome. We are reversing from here or more pain. Well, we don't have a bottoming pattern yet for today. So we still have lower targets in place. Now, the only thing that throws a little wrench in the equation, even with this sell-off, is we can still put in a slight rally. But the odds, unless we get a rip-your-face-off rally with the quarter end, the odds are that at least a short-term high is in. But we don't have the major tipping over point yet. Talk about big sell. ES down 100 points and NASDAQ down nearly 400 points. Yes, and here's, if you want to look at that, there's your markets. But I said, watch the consumer confidence. That came out, forecast 100, which was already bad, 98.7, pretty big drop. And then the Richmond Fed, manufacturing, that is atrocious. But this is the big thing. Services, which was still in expansion, went into contraction. And then Dallas Fed, which you remember their manufacturing was yesterday, their expansion services went in contraction. And remember, we are more of a service-based economy than a manufacturing economy. So then we have daily speaking. It was just oh geez, tech firms are laying off people just because they're repositioning. It's not because things are changing in the economy. The economy is really strong. Blah blah blah. They're so out of touch. But at least they keep stressing the rate hikes. Still 90% probability of 70 basis point. By the way, drifting into larger negative gamma territory. We never got out of it. I showed you the other chart this morning where we were closer, but the future's drifting lower, so we can still get these amplified moves. Here was your double pattern. You can see it really nice on the 1 hour. This push up with the open. And then you got the strong reversal. You can see here, you got that little push up. Here's 9, a little pullback. Then 9 a.m. is when the consumer confidence started coming out. Then it just kept accelerating. You had the other numbers just rolling out, and then the service numbers coming out, and just the acceleration down. When you see momentum bars like this, I wait for like a 5-minute close. Okay, and then you can also trade this with momentum bar. Here's your first real push with momentum bars. Pause, little pause. You start watching a 5-minute rotation zone and just riding it down. And then what do you shift for as we get closer to that 10:30, 11 o'clock? You can watch for the return to the other side of the rotation zone. Little flag pattern here, and we shift to the 15-minute. So we hit the first target. Little flag pattern, back to 15-minute rotation zone, rotating down. Still no major consolidation yet at lunch. Next target's lower, 38.39, 32, 38.23. So this is why we have to stay in tactical trading mode at this point, because when numbers come out in this kind of market, you can still shift things on a dime even with quarter end. Now, do I shift to super bearish, we're going to new lows yet? No, I cannot do that, because even if we complete this double, it was based off this 1 and 4 hour time frame. It completes the pattern, and right below there is the 50% harmonic. So we could still get another significant bounce up going into month and quarter end before a bigger rollover play. Do keep that in mind. Now, we get the close below the 62.5, 37.55. I have to retarget shorts, because then we could retest the lows sooner rather than later. So that's how I lay out my structure. So Ken is touring as I lay dying. Well, I hope you're not dying. I hope that's the band. So again, check out Ken if you want to know. He's a wonderful member of this community and did the intro and did the thumbnails. So he is wonderful. Patrick, hello, late to the party. I'm just trying to give you a huge shout out, Ken, since you're touring with your band. I asked you to start shorting. We got the pattern. You don't short without a pattern. Otherwise, it's a gamble. What if the numbers came out better and it rallied up, Coco? You can't just say, I'm just shorting. Why? The numbers then came out worse, created a pattern, the pattern triggered, and then you short. You put the probabilities in your favor. This is why I hate. Somebody could say, let's go long. Somebody could say, let's go short. And they could both, one could be right, one could be wrong. But if you don't have a pattern, you're just saying, let's just do this. That's why I teach the patterns. That's why I don't just say on there. That's why I show you the patterns so you can learn them. NASDAQ, the double was off the table, but that, remember, that just means you can't use the targets. We went over to break down levels from this morning into the clear path. And now we have the little return. So you have your momentum bars, the breakdown areas I talked about this morning. Momentum breakdown, little pause here, 5-minute rotation zone, and then a huge push down, return to a 15-minute rotation zone with a flag, and there was another great pattern. I'm just watching this little potential double just for a potential lunchtime bounce, and then another rollover play going into this afternoon. Next levels I'm really using for the NASDAQ, 11,704, then 11,652 to 11,669. And that is the 50% retracement of the up move. And you see this prior resistance shelf becoming support. So I will watch for a more stable bottoming pattern down there. The Dow, by the way, this double was technically invalidated on this area. I was still using just the patterns, even though you can't fully rely off them. Because they're lower probability when the double gets invalid with that spike up. But that gave me, there's not a lot of pausing areas into this clear path, so at least gave me targets to ratchet down stops. That's why I kept them on, because we just had a clear path move here, and that at least gave me an intermediate target coming in with the harmonic. See, this blue line is the retracement harmonic. So that gave me a really nice cluster there. That's why I left it on all as well. Next key levels we almost hit the next bottom level, but I'm really still focused on if we continue down to this full target area. I'm not even using these as much. I'm focused on the next one will be 31,025, and then the next one is about 39.27. All right. Now remember, if things shift, there's nothing else slated to come out this afternoon unless something comes out in the news cycle. There's no more releases or anything else. So if you do get some kind of bigger bounce, like in the Dow, you see the 1 hour rotation zone, pay attention to that, the breakdown zone. So if you did get a bigger bounce, 31,350, 340 to 350 would be the target. A bigger bounce in the NASDAQ, the 1 hour rotation zone is a little far off. My bigger bounce target would be about 11,850. That's this prior resistance level. Okay, if you want a closer one, it would be the 37.5 harmonic, which we already bounced and tested, which is 11,816. For the S&P, you don't have much, even on that 1 hour. We don't have much, so on a slightly bigger bounce, I'm watching this breakdown zone with the 15-minute. Then I'm watching around 36.86. If something comes out, we get a rip-your-face-off rally in the afternoon for some strange reason. 38.85, 38.90 target area, the prior breakdown zone. Because, again, you have to be prepared for anything in these markets. What I didn't show you, one of the things that's rallying strong that I just wanted to point this out. I got tied up with those rants yesterday, but Qualcomm, just for you learning the patterns, yesterday triggered a double. You see here, and today you had the announcement with Apple's they're gonna be, I guess, the sole supplier, and it finished the targets, refilling this prior gap, filling this gap fully and hitting that 50 and just missing this gap fill because of weakness in the markets. So if anybody's wondering with Qualcomm, we did have that double bottom. I would not go chasing this now with these kind of markets, especially with daily cycles getting higher. The trade is over. Just wanted to point that one out. Sorry. You are welcome, Christoph. Hello, Kalani. Hope Hawaii is nice. You are welcome, Davey. As for the current sell-off, is strong indication we won't see end of quarter rally. No, we can still see end of quarter rally tomorrow and Thursday, but I can't. It would have to be something really strange to see us reverse this whole move. Could it happen? Yes, because I've seen stranger things in end of quarter rally. It's why I can play this for this topping pattern, but this is not go back up the truck with major short positions just yet for new lows in the bear market. Okay. Again, my trigger point, I'm watching the 62.5 harmonic retracement levels on everything. Keep that in mind, please. That's the way we can structure stuff so we have an orderly structure. Hello, Waka Waka. Glad you have two. Short, that is. Well, I hope you're loading up for the long side. I feel like many people are long from the last few days. This way of market bringing pain to majority, and it could still bring more pain with people getting short. Also, keep in mind, we are still getting institutional outflows. So even with quarter end rallying, it looks like we're still getting institutional outflows, and we are still getting the general public inflows, which can be well seen in ARK for the last few days. The ARK's still getting a ton of inflows. So the general public, even with this pullback, isn't done buying. What's interesting with ARK is, you got the close above 62.5, hitting that 87.5, close at 50, and then rolling back down. But the general public is still buying the dip. That's the message. So that's just where I wanted to leave everyone with the lunch. Let's see if there's any more questions. Watching now with this for a potential setting up a potential bottoming pattern in the notes. Let's see. Killed the short side today on NASDAQ. Great. Fantastic. Shout out to Ken from Lauren. Shorts will cover into the close. They could, especially if we hit some of these bottom targets. Again, because a lot of this tactile trading with going in, if it wasn't quarter end, it would be a whole different story. But you can get some weird moves into quarter end with remember, we are in low liquidity. Also low liquidity in the futures. So big orders can push the futures around pretty big, and then you get stock arbitrage kicking in. So, yeah. Then that would be just for lunchtime. Hey, Amit. Hey, Sashi. You are welcome, Eric. Yeah, Qs. Let's peek in at the Qs. I don't know why it's thinking I'm typing a 1 there when I'm not. The gap is nearly filled, but that would be if you're trading the Qs, that would be the area. And then if it pushes stronger into the close, the 50% level is very key. So those are your two targets on the Qs for the close. The first one would be 284.85. How is volume? Well, if you look like with the S&P, it's not. See, we still don't have. I mean, we still have the afternoon to go, but it would be about average from this little corrective rally. So that's why I'm not getting overly bearish also just yet. Look, these were some volume days back at 13th, 14th, even this bottom that gave the reversal move, the 17th. So far, nothing to write home about. So don't get tied. My advice is if we continue lower and can't reverse around it. If we complete the doubles, can't reverse around the 50%, then we can start looking a little more bearish. But I'm still watching next week once July 4th is out of the way, because a lot of things will get covered into this weekend too, with the 3-day weekend coming up, Saturday, Sunday, Monday. So there'll be a lot of repositioning in front of July 4th, and then a lot of new positioning after July 4th. That would be closing the 62.5. So you are welcome. AB bought the Apple 139 call and sold the 141 call. We can look at that after. I'm going to have to jump pretty soon. Yeah, we're nowhere near a long-term bottom. Okay, just that's a given. If I start seeing either capitulation moves or a major reversal bottoming signal, don't worry. I will tell you. Is that guaranteed? I know I do not have any guaranteed systems. I wish I did. They don't exist. But when something long-term triggers, I will tell you more probability-wise, and then, position differently. Is that anywhere close to triggering? No. So we stay long-term bearish. Yeah, I didn't either. We were still in a horizontal correction until we formed the double top. That's why I keep stressing it's tactile trading. This double top was actually really formed on this really nice push up this morning before your horrible numbers came out. Yeah, don't do anything without a reason and know your risk reward. Don't buy and don't sell without a reason, because you could be right occasionally, but if you don't have a methodology, you're not trading something, from my perspective, systematically. And what happens if you don't have a methodology that you can gauge and track your trades and track your probabilities? If you just say, I feel like today's going to be a red day, or I think it's going to be a green day, and you do something, you can track your rightness over time. But what happens, let's say you're running 60%, you got a good feeling for the markets, but then you have 10 losing trades in a row, which can happen. If you have something tested out, all right, look, I have 10,000 double patterns that have triggered that I know the stats on. More than that, actually. So I can rely on that statistically long term. If you have like 50 trades and you were right 60% of the time, and then you hit a 10 streak loser, that's where people get really messed up, because they don't have enough data to know if that 10 streak's an anomaly, or if they just happened to be right 6% of the time over 50 trades, and that as it progresses, they didn't really have anything systematic. That's where it gets very dangerous. We're not going into a depression. The recession could get severe. It could get very severe. But, but here's the other thing. Don't mix up the markets, and I think we need a substantial unwinding of the fiscal policy and everything else. But the markets were way overjuiced. The markets, so don't mix up. Yes. Recession, major recession. Remember, recessionary plays roughly around 37% in the S&P, down from the highs. Just with that average, I think we're going to go lower than that. Right now, it's only 23.9. 37 would be roughly 29. Let's just call it $3,000. We could go well beyond that. All right, but it's also working off, and it's not just COVID juice. Look at this. Look at this. Since it was the Fed with easy money. Since this is major juice that has to be worked off. So even without going into a depression, the markets can fall even more than you think. All right. One of my friends says, time to buy a home, down 10%. That means there's more to fall in housing. This is happening in 2008, kept falling until 2010. I'm tracking stuff very closely with housing, and the only difference now, if there's going to be a couple areas I think housing's going to hit worse. Like I was looking areas like Phoenix, where pretty much 45% of the sales recently are with investor sales. If they start taking a hit, you can see more of a dump there. But Phoenix went up. I mean, that housing market went sky high. So that has more to fall. By me, there's still so little inventory. Stuff still selling pretty well, but you're not getting the multiple offers. Now, even with that softening, you know, the only way we're going to get into a major housing like 2008 is if we start getting a lot of people defaulting or potentially defaulting, and there were more home sales, but not the kind of stuff we saw in 2008. Now, I could see in certain areas like Phoenix where we get into more of a default because of the amount of investors that rushed in, where that could be higher and you could get pullbacks in certain areas. On the opposite of Jim Cramer, the only common between you and him is the baldness. You'd be better than him. You should be on CNBC. You know what? They would never put somebody like me. And Bob used to be on CNBC and left because of, and he's talked about it before. It's more entertainment. It's not real. It's entertainment crap. It's turned into pump and dump Stockville and whatever else in Arkville. And it's entertainment TV. It's not even financial TV anymore. I don't think they want real financial TV. So that's the problem. The other problem TV has with me is because I am just so technical. And a lot of people, this is like somebody droning on about levels and patterns and this. People would rather hear these, the story that gets their juice going, that gets them all fired up. I want to be upset or angry at the markets, or I want to jump on this. Even Bloomberg does it. And I'm not that person. I might do rants, but they wouldn't want to hear my rants. All right, everyone. They want clowns. It'd be funny if they reached out to me. But I mean, Bob used to do much more than he does. All right, I'll be back after the close. Trade safely. If you don't have a pattern, sit on your hands. If you do have a pattern, take advantage of it. Just be very wary still of counter trend rallies with this pretty strong sell-off today. Talk to everyone later. Bye for now.